Hello everyone, welcome to TradeX On. Real trades, real capital, no demo, no hindsight. This channel documents my trading journey in real time, wins, losses and everything in between. I'm showing you my latest trades. I showed you my trade for ADEA. I opened the trade here on this inside bar when the price broke above the bar, and as you can see, a couple of days ago the price almost hit my stop loss. Fortunately, I placed my stop loss well, so it wasn't hit, and now the price is moving up again. Here, this inside bar is a completely different setup, and I could take this setup too if I was taken out here, but I'm still in the trade, so I decided not to take this one because I would double my size position in this stock, and for now I don't want to do this because the market is very choppy, and I don't want to take more risks. Another trade that I took is on LPG. As you can see here, I have an inside bar and the price opened with a gap down. After that, the price went up, so I decided when it breaks the high of this inside bar to go long, as I did, but I was a little bit late, so I missed the perfect entry, but I'm glad that I'm in the trade and that I'm trading according to my strategy rules. Here I'm with a $3 currently on profit, but it's too early to say if this trade will be a good one or a loss. And the last trade that I took last week was on SEDG. Here you can see that I used again an inside bar. If you stay until the end of this video, I will tell you what an inside bar means and why I trade this setup. Here we have a green inside bar, and according to my strategy rules, when the price goes above the high of the bar, I should open a long position. I was a bit late in this trade, so the price went up and went after that went again down. And when the price was somewhere here, I opened a buy position because I missed the entry here, and I took the opportunity to take a better entry with a better risk to reward ratio. So on the last trading day, I was almost taken out. As you can see, my stop was almost hit, but luckily I am still in the trade and I am waiting to see how the price will develop for this stock. These are my current trades, and I am waiting for the first trading day from the next week, and I want to see how the market will open and to make analysis for other stocks that I'm interested in. Now, as I promised you, I will tell you what an inside bar means. As you can see, I trade this setup very often. I choose strong fundamentally stocks, and when the price is making consolidations including inside bars, I'm very positive in my expectations and I'm trading this kind of setup. Here the green bar is called an inside bar. This is a candle where both the high and the low are completely within the range of the previous candle, often referred to as the mother candle. So this is the mother candle or the mother bar, and this is the inside candle or inside bar. What this tells us is that the market has temporarily slowed down. After a strong move, as you can see here, buyers and sellers are basically in balance. Neither side is strong enough to push price beyond the previous range. So we have this range of the price, and now we are within the range of the previous candle. This creates a contraction in volatility, and in trading, contraction is important because it's often followed by expansion. That's the key idea behind trading inside bars. We are not trading the inside bar itself, we are trading the potential move that comes after it. Many traders look to trade breakouts from this pattern, placing orders above the high or below the low of the inside bar, expecting price to expand in that direction. However, this is where things get interesting. Not all breakouts are real. A lot of inside bars lead to what we call false breakouts. As you can see, I have a lot of losing positions from this setup, but the idea is to be consistent because you never know which setup will go well and which setup will fail, and to have a proper and good risk to reward ratio in every trade. False breakouts happens when price briefly breaks above or below the range, triggers entries, and then quickly reverses. This is often caused by liquidity. The market moves just enough to trigger stops and breakout traders and then goes to the other way. That's why context is everything. You want to look at trend direction, key levels, and overall market conditions before trading a breakout. Now, if you have multiple consecutive inside bars, so if you have a bar, another inside bar, another inside bar, and another inside bars, one inside another, this is an even stronger sign of compression. It means volatility is decreasing even further and the market is tightening into a very narrow range. The longer this compression lasts, the more significant the potential breakout can be. But at the same time, it also increases the likelihood of fake moves before the real direction is established. The fake move is when we have a break under the walls and then the price continues up, or when the price goes up, triggers the traders here and then continues moving down. So instead of reacting immediately, it's often better to be patient, wait for confirmation and avoid getting caught in false breakouts. In short, inside bars represent a pause, and our job is not to predict but to be ready for the move that comes after. Now you're familiar with the inside bar and why I'm using it in my strategy. Thank you for watching this video. This is TradeXon. Trading is not about being right every time, it's about managing risk and staying consistent. If you want to follow the journey, subscribe and I will see you in the next one.